Heading into the fourth quarter, energy and healthcare remain hot sectors, while retail and consumer, there are question marks around. Here to discuss this is Richard Anderson of Moss Adams Capital. Thanks for joining me, Richard.
My pleasure.
Going into the fourth quarter, we expect deal activity in a couple of sectors to remain. What are some of the hot sectors right now in terms of M&A?
I'd say that probably the most active sector this year has been healthcare, particularly in the healthcare IT space. We're seeing a lot of activity there. Industrials have been strong this year. We expect that to continue. Consumer has been somewhat erratic. There's been some great deals that have been announced, but what we're seeing in that space particularly is there's a huge premium being paid for quality. So if a company's doing very well, they're getting a strong valuation, a lot of attention. If they're still, performing, at single-digit growth rates, maybe still recovering from the recession, less activity there. There's a home for those companies, but the double-digit multiples we're seeing for the strong performers, haven't hit that audience yet.
Right now, it's a great time for private equity to exit portfolio companies. What about investing in companies because of these high multiples? What are private equity firms thinking right now?
Well, they're willing to pay a premium for quality, and I describe that as growth, strong margin, and addressing a large market, and truly being perceived as a market leader. They're willing to pay that high multiple because they expect that that company is going to continue on a growth trajectory that will create a lot of value in the coming years and give them great exit alternatives, whether it's to sell to another private equity suitor or a strategic buyer. I would say that the companies, again, that are performing at kind of on an average basis, there are still homes for those businesses, but I'd be cautious about investing in them if the jury is out on their viability long term, given how fast the market is changing and evolving in a lot of these sectors.
When we look at valuations in terms of economic outlook, some are worried this is 2006, 2007 all over again. Do we have enough of a sense of where things are headed that is not the case? What's your thought there?
I think the underpinnings of the economy is a lot stronger today than it was in 06 and 07. I think fundamentally, the banking industry is less leveraged. Balance sheets of companies are much less leveraged. Households are much less leveraged. So I don't expect that we're going to go through a 2008, 2009. If there's any wild card in our future, I think it's China.
Thanks for joining me today.
My pleasure.
And that was Richard Anderson of Moss Adams Capital.